Well, good morning, everybody. Let's get this quick webinar started. My name is Gonzalo de Leon Plata, and I'm part of Trilogy Financial Services. And today, this webinar is just to help our clients and friends and family to, different changes that are going to happen in 2026 or happening, and give you some updates on your goals and change maybe different things to get your financial plan updated. So it's going to be very short. I'm just going over the changes and then going over some planning opportunities. So let's get started. The main thing is, oh, hold on. Yeah. So why this is important? Well, because in 2026, there were major changes on the amount of contributions that you can put away in your retirement plan at work and personal. That's one. And small things change, meaning small things help with big changes. So it's very important that you keep adjusting your financial plan, and it will make big difference in the future. So don't expect like a huge change. It's just more small changes over time. And then another thing is their RMDs, which means requirement minimum distribution for someone that is 73. Well, we can talk about it, change a little bit. So that's something that we need to consider. And then give you some opportunities to change your plan. So again, why these matters again is just because small changes can make big impact in the long run, right? So if we change the limits and we increase the limits every time the government allows us to do that, it's important for your tax planning and it's important for your retirement planning. Uh, Again, some changes will affect your tax planning. I'm going to touch on that in the next slide. And cash flow, and when you're older, cash flow is important, but then tax bracket is important. And then just to create some awareness of the things that we need to change in your plan. Let's start with the numbers. Basic IRA and Roth IRA updates. Again, when you are under 50 years old, the max is 7,500 every year. And then when you're 50 plus is 8,600 every year. So try to get advantage of that. If you don't have a 401k at work and you're doing your own retirement plan, we need to adjust that. And every, so that at the end of December, you already max everything out. Remember that you can still do contributions for 2025. So if you have not maxed out your 2025, you can still do it until the date that you file your taxes, or April 15. Don't wait until the last minute. Try to increase that before you file your taxes. Now, the Roth IRA limits change. So if you're single, it's 168,000, and it's a little bit less than that, but it phases out how much money you can do into a Roth IRA, and it's 242,000, and then just phases out. Why this is important? Well, it's because he's paying taxes now or paying taxes in the future. So depending on your situation in life, we recommend that you take advantage of the Roth situation, the Roth strategy as soon as possible. But then sometimes that's not possible and we need to switch. So it's better to pay taxes today than pay tax in the future for the most part. Again, reach out to your financial advisor here at Trilogy to see what's the best for you. Now, simple IRAs and SEP IRAs, for some of our clients, you have another business owners normally, you have another IRA program that is called simple IRA, and another one is called SEP IRA. So simple IRA, that you can see the max is 17,000, as 17,000, and then 50 plus is 21,000, and then 60 to 63 we call it super boost or catch up, and you can go to 22,250. Now, that's just for your contribution as an employee. If it's a simple IRA, the business owner, the company normally will match 3 or 4%, depending on your plan. So it will be a little bit more than this. And then for SEP contributions, SEP IRAs, normally this is for small business owners with not employees. And yes, even though the max is 72,000, we need to make sure that earned income is what's included in that number. So you need to talk to your accountant or talk to us to see what is the right max for you. So the easy math is just 25% of your earned income. Now, I'm saying that with a lot of asterisks and parentheses and all that is just to start the conversation. At the end of the day, talk to your advisor, talk to your accountant to see what is the right number for you. It depends on how do you do your taxes. Now for the 401k, again, the same goes. So very, it went up to 24,000, and then the 50 plus is 32, 500, and then there's a super catch up, which is 35,000, 750. So try to, again, catch up. And then this is the main change, what happened in the 401k in that world, that high income earners, meaning in the IRS, is high income earners is 150,000 of income. So your catch up, so the difference between the 24,000 and the 32,500, if you want to do that catch up or the super catch up, it has to be after tax money. So this is a good thing in terms of tax planning. Uh, so it's going to create a tax-free income stream for you in the future. So if you're in those levels, make sure you make the change at work. One, two, if you want that, and for whatever reason your job doesn't offer the Roth option, reach out to us. We can help to make the change. If your company allows us to do that, we can make the change into your plan so it's allowed. Should be allowed everywhere, but just in case your plan is not up to date, we can help out in that regard. Um, Now, again, just takeaways from the contributions, just max out as possible. Make sure that you talk to your payroll. Normally, changes happen at the beginning of the year. So uh, make those deferrals quick at the beginning of the year. And then make sure that there's an employer match and that you're aware of what that is. And then again, we need to evaluate. I'm not giving a general advice, but kind of like a if you always get taxes back, maybe it's a good idea that you do Roth contributions. And if your tax liability is always up there, maybe pre-tax contributions, you can do a combination of both. So it's nowadays, if the plans are properly written, you can do both. So that will be the best choice. So take a look at that. We can help you navigate towards, in your 401k platform and to see what's best for you. And then changing this is just for somebody that is already retired, require minimum distributions. As you know, the IRS will ask you, I guess, or push you to take money out from your retirement accounts because they want to get their taxes, I guess. Uh, there are specific rules on how much and depending on when you were born. So it's important that you talk to your financial advisor and make sure that you add all the accounts that are retirement accounts, everything counts that is pre-tax. So we find often accounts that were lost, and when you start working when you were young, but they were still there and they were never taken into account for your calculation, and that's a big penalty. Uh, there was a change that makes that penalty a little bit less heavy. So when you miss part of the requirement distributions, before it was 50% taxed, now it's only 25. But if you find out these early and you self-corrected, it's only 10%. So again, it's important that you have everything in one place and make sure your advisor knows all the accounts that you have. And then bottom line is that you need to plan carefully. Sometimes the number that you are required to pull out, it's high, and that will put you in the highest brackets of the taxes. So maybe it's important to get some strategies, make some tax conversion, Roth conversions. Again, talk to your financial advisor to see if this is good for you. Now, hopefully, I told you this was really short. Um, Again, just opportunities for you. Make sure the contributions are right, are in the level that you need to catch up and you reach your goals. If you need to take money out or you need to deduct more, try to plan to lower your tax bracket if possible, maybe making more contributions, and then work with your advisor to get income sequencing in the sense of which investments are better to start liquidate to start getting your income for retirement. And then please review your beneficiaries of life changes, and then make sure that all the accounts are ready to go. So we're here to help you organize your financial plan, help you with your investment strategies. And then we are really aware of the tax consequences, and it's always central point for what we do. And you will get a personalized review with us. If you're a client, I appreciate it. I appreciate the trust. If you have questions, reach out to us. And if you're not a client, just feel free to reach out to us to help you. And if you think this will help anybody, your loved ones, friends, coworkers, please share these video with them. Hopefully we can help them get straight away. All right. Be safe. Thank you for being here. Let me know if you have any questions. Bye now.